The tariff tightrope. One wrong step, markets tumble. How much can a single decision really rock the boat, folks? I mean, really shake the foundations of Wall Street. Are we talking ripples? Or are we talking a full-blown tsunami warning for your portfolio? Billions, even trillions hang in the balance every single trading day. This isn't just some academic exercise, people. This is about the cold, hard cash in your retirement accounts, your kids' college funds, your dreams of financial freedom. It's all on the line. We're talking about those earth-shattering announcements, the kind that make your phone blow up, the kind that sends seasoned traders scrambling for the nearest antacid, or maybe something stronger. Policy shifts, unexpected news, tariff talk. Yes, tariff talk is back with a vengeance, and it's landing on Wall Street like a ton of bricks. This isn't a drill, this is real. This is happening right now, as we speak, on June 4th, 2025. The air is thick with tension, you can feel it, can't you? It's that pit in your stomach when the market ticker turns blood red. This isn't just about numbers flickering on a screen. Oh no! It's about American businesses, it's about global trade, it's about your financial well-being. The tightrope is strung, and the winds of change are howling. One wrong step, one miscalculation, and everything could come tumbling down. So, are you ready for this? Are you prepared? Because what I'm about to tell you is a shocker. It's a game changer. It's the kind of news that separates the winners from the losers in this crazy market. We need to understand what's happening, why it's happening, and most importantly, what it means for your money. So, buckle up, buttercups, it's going to be a wild ride. Booyah! Trump's big reversal. The day the tariffs tumbled. Boom! Just like that, folks. A thunderbolt from the blue. Former President Donald Trump. He's done it again. He's flipped the script. He's reversed his stance on those massive tariffs. Specifically, the ones slapped on Chinese goods. Can you believe it? After all the tough talk, after all the trade wars, a full 180-degree turn. This just came across the wires. Early June 2025. Mark this date. This wasn't some minor adjustment. Not a little tweak here or there. No, sir. This was a seismic event. A bombshell dropped right in the lap of an already jittery market. The implications are huge. We're talking about billions, maybe trillions in trade flows. The kind of decision that sends ripples. No, not ripples. Tsunamis across the entire global economy. Wall Street certainly felt it. Instantly. The shockwaves were immediate, palpable. You could almost hear a collective gasp from trading floors across the nation. Phones started ringing off the hook. Computers lit up with sell orders. The initial reaction? Pure, unadulterated panic. This wasn't in the playbook, people. This wasn't priced in. This was a curveball thrown at lightning speed, and many got hit. Hard. Think about the whiplash. Businesses had been trying to navigate the existing tariff landscape. A complex, ever-shifting maze. And now this. A complete reversal. It throws everything up in the air. Supply chains, pricing strategies, investment plans, all of it. Back to the drawing board again. The uncertainty is deafening. And uncertainty, as you know, is Wall Street's kryptonite. It's pure poison. The $25 billion bombshell when an auction implodes. And then, as if one earthquake wasn't enough, wham! A 1-2 punch straight to the market's solar plexus. Just as Wall Street was reeling from the tariff news, this hits. A $25 billion U.S. Treasury debt auction. Now normally these auctions are pretty standard fare. The U.S. government needs to borrow money. Investors lend it. Simple, right? Wrong. Not this time. This auction, my friends, didn't just underperform. It didn't just see weak demand. No. The word on the street, the whispers in the dark corners of high finance, this auction imploded. That's a strong word, a scary word. It means investors, the very people who normally lap up U.S. debt like it's a blue-chip stock, suddenly got cold feet. Very cold feet. Ice cold. Why? Why would this happen? Think about it. The tariff reversal, the sudden policy shift. It screams instability. It screams unpredictability. And if there's one thing bond investors hate more than stock market volatility, it's government policy that zigzags like a drunken sailor. They want safety. They want certainty. And right now, the U.S. economic picture is looking mighty fuzzy. Mighty uncertain. This isn't just about 25 billion, folks. That's a lot of dough, sure. But it's about what it signals. It signals a potential crisis of confidence. Confidence in the U.S. economy's stability, confidence in its ability to manage its colossal debt. If the U.S. can't auction its debt smoothly, what does that say? It says trouble. Big, ugly, capital T trouble. The kind that keeps sane investors up at night. Trade turmoil unpacking the economic fallout. So the tariffs on Chinese goods are suddenly gone? Or drastically reduced? The details are still emerging. But the reversal is real. What does this mean for actual trade? For the flow of goods across the Pacific? For the American companies that make things here? For the American companies that import things? It's a hornet's nest, folks. A tangled mess of consequences. No easy answers here. On one hand, you might think, great, cheaper stuff from China, and maybe, just maybe, consumers will see some relief. Lower prices on electronics, on clothes, on all those things we buy. That's the theory anyway. But hold your horses, it's not that simple. What about the American manufacturers? The ones who were told to tool up, to compete against subsidized Chinese goods. Now the rug is pulled out from under them? This kind of abrupt policy U-turn creates chaos for businesses. Pure, unadulterated chaos. Imagine you're a CEO, you've spent months, maybe years, rejigging your supply chains, finding new suppliers, dealing with higher costs because of tariffs. And then overnight, the rules change, completely. How do you plan? How do you invest? How do you hire? It's like trying to build a house in an earthquake. The broader economic impact, we're talking potential deflationary pressures if cheap goods flood the market. We're talking about certain domestic industries suddenly facing an existential threat. We're talking about our trade deficit with China. Will it balloon again? This isn't just about tariffs. It's about industrial policy, it's about national security, it's about American jobs, and right now it's a massive smoking question mark. Section 5 Wall Street's whiplash, investor sentiment on edge. Investors, God bless them, they crave stability, they yearn for predictability, they build their beautiful complex models based on assumptions. Assumptions about policy, about economic direction. And what do they get with this tariff reversal? A sledgehammer to their assumptions, that's what they get. Investor sentiment has gone from cautious optimism to outright fear. In a New York minute, think about the constant flip-flopping. It's not just this one reversal. The research notes are screaming it. 21. That's 21 documented changes to Trump's tariff policies since February 2025 alone. 21. How is anyone supposed to run a business in that environment? How is anyone supposed to make long-term investment decisions? It's like playing poker with someone who keeps changing the rules of the game, mid-hand. Just a few weeks ago, mid-May 2025, there was a different tune. Remember that? A 90-day suspension of heavy tariffs. The US and China had talks in Geneva. US tariffs on Chinese goods were to be reduced to 30%, not eliminated. Chinese tariffs on US goods to 10%. And the market loved it. The S&P surged 184 points. The Dow jumped over 1,100 points. The Nasdaq was up nearly 800. That was seen as a step toward stability. But this early June reversal, it's different. It feels more erratic, less strategic, and coupled with that disastrous debt auction, it's a recipe for panic. Investor sentiment is now fragile, like a glass menagerie in a bouncy castle. One wrong move, one more surprise, and things could shatter. The VIX, the fear index, is probably going through the roof as we speak. This is white-knuckle time, folks. Section 6. A history of hedging tariffs past and present. This tariff roller coaster? It's not a new ride at the amusement park, people. We've been on this one before, especially under the Trump administration. Remember back when he was president? Sweeping tariffs. 25% on steel, 25% on aluminum. Aimed at protecting American industries. The intentions might have been one thing. The market reactions, often quite another. Volatility became the norm. And the recent past since February 2025, it's been a blur of adjustments. Pauses, hikes, reversals. That number again, 21 changes. It's dizzying. Take April 9th, 2025, for instance. Reports said Trump paused the of his proposed tariffs for 90 days. Sounds good, right? A little breathing room? Wrong! In the same breath, he supposedly jacked up tariffs on Chinese goods by a staggering 125%. Talk about mixed signals. This constant shifting makes it impossible for businesses to plan, for investors to strategize. It's like trying to navigate a ship in a hurricane with a compass that spins wildly. The mid-May 2025 deal, the one that saw markets cheer, that was a negotiated agreement, talks in Geneva, a structured reduction, not a sudden obliteration. That was driven by US domestic pressures, rising consumer prices, challenges in manufacturing. It felt, dare I say, almost rational. But this latest move, this early June shocker, it feels different, more impulsive, less about a coherent strategy and more about, well, who knows what it's about? That's the problem, the lack of clarity, the sheer unpredictability. It undermines confidence, not just in tariff policy, but in the broader economic stewardship. And that, my friends, is a dangerous path to tread. Very dangerous indeed. Section 7 Meltdown Monday, the market reacts, the auction falters. So, the news hits the street, Trump reverses China tariffs, the $25 billion debt auction tanks, what happens next? Predictable, utter chaos. The opening bell sounds, and it's like a trapdoor opens under the market. Whoosh! Down it goes. We're talking a 3% plunge in the major indices, in a single day. 3%. That's not a dip, folks. That's a nosedive. That's a DEFCON 1-level event for your 401k billions. Trillions even, in paper wealth. Vanished. Poof! Like a magician's trick. Only this trick isn't entertaining, it's terrifying. Brokers are screaming. Algorithms are flashing red. Margin calls are going out. The fear is palpable. It's the kind of day that makes grown men cry. The kind of day that makes you question everything you thought you knew about investing. This is what happens when policy shocks hit an unprepared market. And that debt auction, the $25 billion question mark, it wasn't just lackluster, it was a disaster. Demand was pitiful. The bid-to-cover ratio, probably the worst in recent memory. Investors, both domestic and foreign, basically said, "No thanks, we don't want your debt right now." This is the United States of America we're talking about, the supposed gold standard of safe assets. And buyers are scarce? Unthinkable. This double whammy, the tariff reversal creating uncertainty, and the auction failure signaling a lack of confidence in U.S. fiscal health, it's a toxic cocktail. It tells you that the market is deeply unsettled. It's worried about trade wars. It's worried about economic stability. It's worried about the government's ability to finance itself without paying through the nose. This isn't just a bad day, this is a warning shot, a massive blaring siren. Section 8, the tariff takeaway. What does this all mean? Okay, deep breaths, everyone. Let's step back from the edge of the cliff for a moment. What's the real takeaway here? What are the big lessons from this day of madness? We've got a sudden, shocking tariff reversal on Chinese goods. We've got a U.S. Treasury debt auction that went belly up. And we've got a stock market that threw an absolute tantrum, dropping 3% like a hot rock. The immediate conclusion? Policy unpredictability is poison. Absolute poison for the markets, for businesses, for investor confidence. When rules change on a whim, when long-term strategies can be upended overnight, capital goes into hiding. It seeks safety, or it simply vanishes in a puff of devalued assets. This isn't about whether tariffs are good or bad in principle. It's about the policy is made and communicated, or in this case, unmade. This episode, particularly the failed debt auction, puts a glaring spotlight on the U.S. economy's underlying vulnerabilities. Our national debt is enormous. Our reliance on foreign and domestic investors to keep buying that debt is critical. If that confidence wavers, the cost of borrowing goes up. For the government, for businesses, for you, with your mortgages and credit cards. It's all connected, folks. The broader economic significance is profound. This isn't just a Wall Street story, it's a Main Street story. It's about the stability of the global financial system. It's about America's standing in the world. Can we provide the steady leadership the global economy needs? Or are we now the source of instability? These are uncomfortable questions. But after days like today, June 4th, 2025, they must be asked. Loudly. Section 9, your take, what's next for our wallets? So, there you have it. The chaos, the confusion, the cold, hard numbers, Trump's tariff reversal, the debt auction debacle, Wall Street's wild ride into the red. Now I want to hear from you. What's your take on all this madness? Are you seeing this as a buying opportunity? A chance to scoop up some bargains while everyone else is panicking? Or are you battening down the hatches? Selling everything that's not nailed down? This is where the theories meet the tarmac, people. This is where you, the individual investor, have to make decisions. Tough decisions. About your money, your future, your financial security. Do you trust that this will blow over, or do you think this is the start of something bigger, something uglier? There are no easy answers, and anyone who tells you they have them all is selling you snake oil, plain and simple. I've laid out the facts as I see them, the historical context, the immediate reactions, the potential implications, but the market is made up of millions of individuals like you, making choices, driving trends. So what are those choices going to be? Are you looking for defensive plays, utilities, consumer staples? Or are you betting on a quick rebound? Technology, growth stocks? Let me know. Drop your thoughts in the comments section below. Seriously, I read them. I want to know what the pulse of the Mad Money Army is. And hey, if you're hungry for more insights into navigating these treacherous economic waters, or want to revisit some classic meltdowns and miracle comebacks, make sure you check out my previous videos and content. Stay informed, stay frosty, and always do your homework. Booyah!